Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we're going to be talking about Ripple and XRP. So let's just dive in and let's talk about a few things. So first and foremost, we did see some nice volatile spikes on Bitcoin. We were trading at almost 21K yet again. Of course, we did not have enough volume to, keep us afloat, which I did warn you guys a little bit about yesterday. That's why I did not get excited on that move at all. In regards to XRP, it's still sitting around like the 32-cent mark. On the 24-hour spend, though, we have been seeing some altcoins jumping out. We do see 20+% moves here. On the 7-day span, we do see some significant double-digit figures, 24%, 32%, 48%. But ultimately, most of the market, there's always going to be a few altcoins that are doing some nice runs like that, but for the most part, the market has been sitting stable with not too much price action around altcoins at this current moment in time. Now, as everyone is worried about Bitcoin and, they're trying to call the bottom and things like that, I want you guys to understand, and I've warned you guys multiple times, that these bottoms do take time to actually be printed in, and, as we do kind of wait for that to happen, my, prediction on that is roughly like around the fall time frame on the bottom being printed in. Of course, that's just my opinion. You guys do whatever you want. But as we do kind of wait for the bottom to be printed in, similar to March of 2020, we are seeing news media trying to say that crypto is basically imploding, which always tells us that this is a buy signal. And listen closely to this from CNBC.
And you might be right about, could be Friday. We could get a data point that shows that what we thought was, there's a piece in the journal about this is like the bizarro world. We've had high unemployment and good output, but we usually don't have really low unemployment and where output is negative. And maybe instead of the output catching up with the high employment, maybe the high employment catches up with the weak output by having a bad number.
I think the high employment catches up. The other thing that's really interesting is just that with the dollar this strong, almost every company that has any international business could have to guide down. So you have to be in domestic companies that are healthcare related, that do not have a problem with the president. And that's a very small group. That's McKesson, which, of course, is one of the best performing stocks in the first half. So, look, right now it looks like that everything's bad. And I'm not going to deny that every asset class is getting hurt. The one I'm most interested in is crypto, because a lot of people are in crypto, and crypto really does seem to be imploding. But it goes from $3 trillion to $1 trillion. Why should it stop at $1 trillion? There's no real value there. NFTs. You look at these companies, there's these companies that you never heard of, and they blew up over the weekend. And you just say to yourself, holy cow, there's $600 million just going down the drain. And we had Gary Gensler, the chairman, on a few weeks ago, and he just said, look, anybody who has a come-hither rate of investment, you just, in other words, the rate that you earn, you can kind of forget about them. And that's what's happening.
All right,
how many
Jim.
places can Sam Bankman-Fried save? Melissa, how many can he save?
We had 13.9 was what Katie Stockton's next Bitcoin support level, 13.9.
What an awful ass NFT.
What an awful asset. NFTs sold to you, made up. I gotta really say, these people know nothing. It's funny that these people are on, retail TV telling you what stocks to invest in, telling you what stocks are going to be the next big thing. Jim Cramer, one of the worst prediction, analysts out there. You could, trade against him and, be extremely wealthy compared to if you trade it with him. And it's funny, like he's saying, why should it stop there? Crypto has no real value. I want these people to realize that at some point in time, everything, and I mean everything, as funny as it is, right? He's talking about, stocks. These are the markets that will run on blockchain. The stock market will be tokenized. I've said it time and time again. And it's just funny that these are the people that are making an impact on the retail individual. This is also why, for the most part, a lot of individuals miss out on the bull run. They get in later when these same people are saying to jump in, get in right now. And we do see Johnny Dean actually responding saying, Jim, do you still own Ethereum? Several weeks ago, you said that it had 40% upside. Again, It's exactly my point. Like, these people will FOMO in and also spread the news to all the retail individuals when it's too late and there's still not enough, gains there for them to make, a ton of money. This is why it's always key to get in before they do flip bullish. When they are bearish, that's when you should be bullish. And we do see over here from Crypto Law. So I recently just talked about this, but I do think that it is good to note it yet again. The SEC seeks to characterize digital tokens themselves as securities even outside the context of any fundraising without a clear basis in current law for doing so. And this is talking about the Supreme Court's wrecking ball could impact the SEC authority. I do think that the Supreme Court at some point in time is going to step in. It is just far too big to ignore at this point in regards to like the SEC's overreach within like crypto legislation, or if you will, crypto regulation. And it's regulation by enforcement at the end of the day. So I don't really like the idea of like the SEC actually even having any sort of power over this market. It's funny that Jim Cramer also mentions Gary Gensler. No surprise there. Yeah, to me, like there's so many great things aligning for XRP right now. Not only are we seeing the SEC essentially being targeted from the Supreme Court, but we also do see over here from Cointelegraph after 8 years, of methodically dumping XRP. It looks like Stellar co-founder Jed McCaleb's XRP journey is on track to end in July. He only has 81.5 million XRP left to sell. And all while we are focused on this and we are, watching this actually happen right now, this is very bullish, as you guys are probably all aware if you have been holding XRP for a very long time. This is a historical moment in time for all XRP holders. This is actually very, very bullish for us. All of this is aligning perfectly, with also XRP adoption. We do see over here the big shift. Believe it or not, those that stay on course will go extinct. And we do see down here, with XRP, trapped capital is 0. Again, this is from the, South Asia and MENA district. I believe that we talked about this slightly, but I actually want to go in depth on this real quick, as we have been seeing a large amount of things actually come up, and I'm going to connect the dots here.
Believe it or not, there are some legacy.
Also, yes, the sound quality on this video is rough.
Players that simply do not want, which is one of the other challenges, I think, do not want to believe that these technology companies are actually a threat. And so they stay on course, and I believe that they will go extinct. Fintech now takes 1% of total addressable market of the financial services. It will take a lot more in the coming years.
So is it a threat then to traditional financial institutions on the whole, or is it more about embracing it? Bob or Naveen, I'd love for you to jump in.
Yeah, I can jump in, and we can go a little bit, couple of levels deeper, because otherwise we'll be at the surface, right? So what is causing this change? So at least from one use case that we can see, so crypto trades 24/7, 365 days a year. That means on a Sunday night, you can essentially buy a Bitcoin, Ethereum, XRP, USDC if you wanted to. So what opportunity does it create? The opportunity it creates is normally when money moves around the world, if you look at remittances, which is about $150 trillion of money movement cross-border, say if you're sending money from GBP to Philippines peso, GBP goes into US dollar goes into Philippines peso. That's how the money traditionally moves. And in that, there is something called as Nostro or Vostro accounts, and that's about $5 to $10 trillion of trapped capital that a sending institution has to keep with the receiving institutions to make that money flow possible, right? And that's almost the large majority of the cost, the capital cost and the depreciation risk, which comes in a remittance when essentially money moves from GBP to Philippines peso in this case. But if you were to use a crypto asset in the middle, which is a 24/7 market, then you're moving money from, say, GBP to USDC to Philippines peso, or GBP to XRP to Philippines peso, in our case, for example. And in that case, the trapped capital is 0. You're able to send money 12 o'clock in the night at an instant rate at almost a very minimal cost for the customer.
And that is what we are waiting for. Also, I do love the fact that, the CEO and board member of Qatar Financial Center did also mention the fact that, listen, we are basically only at, and we're talking about, at the all-time highs, at a 1% addressable market of the financial, markets themselves. That's basically what crypto makes up. Listen, I've said it time and time again. As we do look at crypto, we look at crypto adoption, we look at crypto technology, for an example. This is the new 1%. A large amount of people will disregard it. A large amount of people will just continue to ignore it. They don't see the big impact that crypto essentially will have on everyday life. We look at XRP, and I think that a lot of people kind of confuse the idea of like XRP being worth this price, that price, whatever price. But the gist of it is the idea that XRP actually, when you look at the mechanism that Ripple has created with RippleNet as well, XRP is going to fuel a revolution around instant settlement and liquidity. Remember, liquidity is a very, very large portion of the picture when you do look at like the financial markets and the disruption around it. And of course, talking a little bit about this video, if we go back in time a little bit to 2017, so this is roughly 5 years ago now. National Bank of Abu Dhabi, first Middle East bank to use Ripple for cross-border payments. Now you might be wondering, why do I bring this up? Why are we talking about this? Well, I've seen this get posted on Twitter just recently, and it kind of made me think about something. And the idea of this was the idea like, we see a lot of people say, well, when we look at XRP and we look at Ripple, like why would they be utilizing XRP, or why will Ripple basically be utilized by, all of these major banks? To me, it's quite simple. We do see down here, and this is from the CEO, Brad Garlinghouse, saying banks and their customers have been hearing about the promise of blockchain technology to enable real-time cross-border payments. Now, some of the most innovative and successful banks, like NBAD, are making this a reality by offering Ripple-enabled payments to their entire customer base. And in doing so, paving the way to make 2017 the year we see broad commercialization of blockchain take hold globally. Now, when we look at this is actually a pretty big step if you think about it. Going back to 2017, by the way, this is why we focus on all of the names that are connected with Ripple. First off, these banks are going to, work with Ripple, these financial institutions as well, simply due to the savings on every single transaction. You're looking at 30% right off the board with utilizing just RippleNet, not even incorporating XRP, plus 60% if you are looking at utilizing XRP with this. The efficiencies around like real-time settlement, or even just instant settlement, sourcing liquidity through XRP is something far too large to actually ignore, especially if you are a bank, maybe even if you're Swift, right? We've talked about Swift. A lot of people think that like Swift will cease to exist at some point. I don't think that that is the case. In fact, I think that Swift has connections to 11,000 financial institutions. Okay, we always look at Ripple customers. For an example, if we go to the home page, we scroll down. Here's a few of their customers, right? Now, Tranglo, for an example, connections to like roughly, I think it's like 14 or 1,800, financial institutions. Now, there's a name that is not here. That's on the scroll list. But Accenture, for an example, or even, you look at like other ones as well, like Finastra. Finastra is actually a very good one because there's like over 8,000 plus names tied to it. The reason why I bring this up and the reason why I talk about it is because Swift has 11,000 financial institutions. They're banks. And when we look at Swift, we've discussed this slightly, where Swift is not going to be replaced by Ripple. Ripple has never had the plans to replace Swift, but Ripple has had the idea of complementing, Swift. Again, I've just shared this in a video from the other day where I was saying, Swift is not broken. No, the payment mechanism behind Swift, sourcing the liquidity through Nostro Vostro accounts, that's the broken link. You fix that link, and you complement that system, and you have 11,000 financial institutions sourcing liquidity on a day-to-day basis at $5 trillion. Let me repeat myself. $5 trillion per day in gross settlement over a single network. Will it be settled over Swift network? Sure, it could. But the underlying technology you won't even see. Individuals won't even know it's there. Which again, takes me back to the CNBC interview with Jim Cramer. It's funny, right? Everybody wants to talk about, crypto. They want to laugh at it. They want to, look at it and say, oh, it's nothing, whatever. These people are the same individuals that don't realize that the technology stack behind a large amount of these crypto assets are actually going to disrupt and fully embark us onto a vision where real settlement and liquidity sourcing is a possibility. And I don't mean just liquidity sourcing in terms of like Nostro Vostro accounts. No, I mean on-demand liquidity. That is a very large stepping stone. Fragmentation. Also, fragmentation is a huge issue around a large amount of industries. Healthcare, data. You look at everything around finance. It's a fragmented system. It's not running efficiently. It has a ton of friction. There's many issues around it that are, problematic. These are markets that will be disrupted. These are markets that will be, at the end of the day, at the forefront of crypto focus. I think that these people are extremely idiotic in the sense of like not understanding the technology, not doing enough research to even talk about the technology, and it also tells me that we are still extremely early. I just shared with you Tim Draper saying that that crypto is much larger than the internet. I would completely agree. I think crypto is here to stay. I think that it's much larger than what anyone can really kind of perceive it to be. It's just that you actually have to see that end goal. To me, $1 trillion, $3 trillion, $5 trillion, $10 trillion. It does not matter. I don't care about those price valuations for crypto. In fact, I've said it time and time again. By 2030, this asset class is going to be one of the largest asset classes in history. And the individuals that are early adopters of this technology, that are early visionaries, seeing the vision behind a large amount of these use cases, are going to be the future 1%. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As those up to you all, have a beautiful day or beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.